some travel stocks now. We do so in the wake of that update coming from corporate travel management yesterday, making some big moves in Europe. Harry Watt from Shaw and Partners and Market Matters joins us now. Harry, really nice to see you this morning. Corporate travel set the scene, I suppose, for the conversation. First of all, what do you make? Because it's quite specific to corporate travel. It's got this material contract in the UK.
Good morning, Nadine. It certainly is. It's very, corporate travel specific. It's a big contract. It's, $3 billion in total transaction value for corporate travel, which is it's massive. In the grand scheme of things, it's about 17%. If you annualize their first half, they did 4.2 billion total transactions in the first half. So it works out to be about 17% per year on that first half annualized number, which is significant. It'll be interesting to see how this flows through into corporate travel's earnings, though. We didn't really get an idea of the margins that are coming through out of this contract. It's a very specific contract as well, so it's relating to immigration, rehoming, temporary accommodation for migrants coming in to the UK. And it's actually surprising to see how much money is being spent on that, which makes it a very complex sort of situation. You think of that's very small incremental numbers that builds up to a $3 billion total transaction value over the 2-year life of that contract. So we haven't really got a chance to chat with management yet. Management were pretty cagey on what it means for their earnings and for their margins in this specific case. But overall, you can't. I don't think it can be a poor contract to win for corporate travel given the size of it. And they do have a really good, strong footprint in the UK as well, Nadine. So they do have people on the ground, men on the ground, to sort of service this one. But it'll be interesting to see how significant an impact that is on their costs over there as well.
Okay, so that's very specific to corporate travel. But when you think about, the reopening thematic, when we think about travel stocks, I mean, we've seen a lot of strength. I was speaking with a CEO from J-Ride the other day who was saying, they're preparing for an absolutely bumper travel season for the Northern Hemisphere summer, particularly in the United States. Does that give you faith and confidence in some of the distributors like the Flight Centres, the Webjets of the world?
Yes, I think it does. Travel's actually not as discretionary as a lot of people would think. A lot of people sort of think that that's sort of one of the first levers that you pull back on in terms of spending, and as inflation's picking up and people are under a bit of cost pressure there. But overall, it's actually been really well supported, and even coming on the back of 2 years, I don't really like to say post-COVID anymore. It's been a while since. That should have been an issue for companies. But in terms of the consumer, they're very keen to get out there. They're very keen to explore again after being sort of having to be tucked away for a little while as well. So we are seeing that spending turn. On our numbers, we're sort of looking at about a 8% below pre-COVID 2019 total spend on travel for this calendar year. That should surpass it next calendar year. So we should be a bit over 100% of 2019's total spend on travel come 2024, and maybe even 110% by 2025 as well. So, the intentions of spending is there, and these travel stocks are starting to get the benefit of it. They did have to raise a hell of a lot of money through COVID, so through 2020. We had a number of these, travel-related stocks raising money to save their balance sheets. Then they went a little bit more aggressive and they started consolidating the space as well. So, they've grown their shares on issue substantially, and that means they need to grow their earnings to sort of support those valuations. They are a little bit, punchy in terms of the numbers. Flight Centre trading up there sort of above 20 times, corporate travel's above 33 times earnings. So they do need to grow these earnings pretty substantially to sort of build into those numbers. But overall, the backdrop is reasonably well supportive for the travel stocks at the moment. So it's an interesting space to play. I think you do have to have your eyes up and be looking a little bit, more than 6 months out. Maybe it's a 12-month view, but it is starting to turn. We are starting to see travel spending being pretty sticky at the moment, Nadine.
Qantas, do you have a view on Qantas?
Yeah, so they've been an interesting one of late. They came out a couple of months ago and said they had to spend about I think it was about $4 billion in capex in terms of replenishing their airline fleet and also doing up their lounges and things like that. So that's sort of they've got a little bit outdated. It's not like Qantas to fall behind the curve there. They seem to be the market leader in terms of quality of fleet and quality of lounges in the airports around Australia and globally as well. But yeah, is a big risk. It's very cheap Qantas at the moment. It's on a single digit PE, and you sort of think about that business longer term. You can sort of recycle capital through that one reasonably well. It should be probably trading on maybe 10, 11 times longer term, but it's cheap, and I think there's a reason for that. It's that capex spend that's going to put a bit of pressure on the near term earnings and put a bit of pressure on just the risk around their execution. It's a big spend. There's also a couple of other things going on in the space. So Alan Joyce, we're not sure what his plan is yet, but I can't imagine he's going to be around heading up Qantas for forever. So is there some management risk in there as well? We've also got the Virgin airline IPO coming in perhaps later this year. They're touting it. I don't know how supportive markets are of IPOs at the moment, but Virgin have sort of come to market and have sort of started to put some numbers out there to say that they want to be listed again with about a $3 billion valuation, $3 billion plus valuation coming out of that one. So whether that sees a bit of recycling capital from the investor standpoint coming out of Qantas and into Virgin, if they do come to market, I think that might put a bit of a crap on Qantas's share price going forward, at least for the next 6 to 12 months, Nadine.